Picture this, I was over $250,000 in student and credit card debt. I had about $55,000 in my Webull account. And over the next 12 months, that $55,000 turned into less than $5,000. $50,000 gone. Blown it. Not an incredible blow up like some people may have, just a slow, excruciating bleed. My account was nearly empty, so was my motivation. I felt like I had literally hit rock bottom. I was this close to throwing in the towel, but I didn't. And looking back now, that moment, that near failure, that near end of the line, end of the journey, was just the beginning of something much bigger. I was given so much advice over the years, and at the time, I thought that I needed to follow every word. I would stay up late, my mind would be racing, all this advice going through my head, just not knowing what I should do. I didn't realize how much of that advice was actually hurting me and keeping me stuck, but I ultimately learned the hard way. And so today I'm sharing that journey with you, because if you've ever felt like you're drowning in bad advice, I got you. Every trader at some point in their career is given advice. Some good, some bad, some feels great in the moment, but is just so incredibly toxic to your long-term success. Some of that advice almost made me quit trading completely because of that $50,000 bleed out. And so yeah, that sucks, but let's dive into some of the most toxic advice I'd been given that I wouldn't follow again. Let's start with one of the most popular pieces of advice. You need to have a daily or weekly trading goal. The idea behind this is that you need to have a specified number or a percent that you're targeting every day or every week, every month, it could even be every year. And your goal is to try to hit that. Just like one of my goals was hitting a 225 bench in college, I wanted to hit 1% per day every day. Now, when I was starting out, I thought this was the key to success. I thought, okay, well, if I can just follow this and if I can shoot for 1% per day or even a 0.5% per day, I'm going to compound amazingly. So I'd set out on my daily goal every single day, and some days I'd hit it. Boom, awesome. I'd close out of my accounts, I'd go outside, maybe go for a walk in Austin, go to the gym, and I was chilling. But here's the problem. On days that I didn't hit my target, I'd feel frustrated. I'd overtrade. I'd try to make up for it. I would sit at my desk all day long, trying to make it back until the market closed, then into the after hours, and then until the after hours closed, just trying to hit a stupid number. The stress would build up, and guess what? The days I didn't hit my goal and I ended up losing money, I ended up losing a lot more than the days that I did hit my goal and walk away. I didn't realize it at the time, but this whole target mindset is completely flawed. Trading isn't about hitting some arbitrary number every single day. It's about finding the opportunities and staying disciplined with the opportunities that present themselves whenever they do, based on my strategy, based on my edge. And I've come to realize some days that just doesn't present, or you just lose on a great setup and you're not going to hit your goal, no matter how hard you try. Next up, it's that silly little news scanner. Every day I used to stare at my screen glued to the news. The advice that I got was I needed to follow every single headline in real time because the markets would move and there's opportunities. If you didn't, you're just playing the game from behind. Oh, look, Tesla earnings today. Oh, look, a CEO got arrested. That's gonna move the stock. And guess what happened? I started trading off of every little blip, every headline, every piece of news. Strategy out the window. Every headline that came through, I saw as an opportunity. And I can't tell you how many trades I took within seconds of a headline coming out that I was on the wrong side of and absolutely crushed me. No plan, no idea what the news meant half the time, but I just had to be in it. Now, sure, staying up to date on the news, that's important. And there's a place for that. And there's strategies that actually require that. But make sure you're using it for that reason, for your strategy, and you have data behind it, not just going in blind with no strategy because that news looks good or it looks really bad, so I need to get short immediately. Now, the third piece of advice is one of the funniest looking back on it. But first, I want to thank the sponsor of today's video, Ironbeam.
Welcome to Ironbeam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Ironbeam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Ironbeam brings the future into the present. Join now and augment your trading experience.
Finally, my favorite toxic piece of advice. The idea that you need to have an 80% win rate strategy in order to be profitable. We should be striving for 80%. Sounds appealing, doesn't it? Wrong. Here's the thing. The truth is, a lot of traders, even the successful ones, don't have an 80% win rate trading strategy. I know traders in the 40 to 50% win rate, and heck, I even know traders in the 20s, meaning that they're winning 20 something percent of their trades, who are absolutely crushing it and consistently profitable. The key isn't necessarily how often you win, it's how much you make when you win and how much you lose when you're wrong. Literally, risk management in a nutshell. A bad loss can wipe out a week's worth of profits, maybe even a month if you're not careful. And that's exactly what was happening to me when I had my daily goal. I fell into this trap of chasing a high win rate. I just ignored the importance of risk reward and over traded to try to get more wins. But that approach didn't work for me, and I've got a very hard time believing people who say it works for them. Your win rate is just a number. Yeah, it's important. It's part of the calculation. But what matters is how you manage risk and how you do that over time in combination with whatever win rate you've got. So what's the takeaway from all this? Trading is not a one size fits all. Advice can be helpful, but not if it doesn't fit your personality, your trading style, and strategy. What works for someone might not work for you, and that's totally fine. It's just so easy to get caught up in the hype of what people say you should do. Set goals, follow the news headlines, strive for perfection. But the reality is, trading is all relative. And if you ask me, that's why I think trading is so cool. It's not about hitting every target, it's about staying consistent and doing the same things over and over again just to find what works for you. Now, if you want to learn more about how to level up your trading and avoid that toxic advice, hit that subscribe button and join the community. We're here to get better, not just with strategies, but with the mindset that we need to succeed. Thanks so much, guys. Peace.